Hey everyone, welcome back to your weekly market outlook. This is for the 23rd of December 2024. And to begin with, just want to wish you guys a very happy Christmas and a happy New Year for next week. Okay, so let's take a look at last week, a very intense week. And this is something that we were already anticipating, that there's going to be a lot of chaos in the market. But yeah, I think a lot kind of pins down on what the FOMC is going to be doing. Again, this is already something that it's not really a huge surprise. The market meltdown on Wednesday, that was a little bit of a surprise. I think the market just took it a little bit over the edge there. But the FOMC economic projections comes in with a consensus that the FOMC is probably only going to be looking for about 50 basis points of interest rate cuts in 2025. That's about 2 rate cuts. That's less than what the market was expecting, which is a 3 rate cut. And obviously that sends a lot of fears into the market. The VIX was pushed up. And also we saw that crash in the equity markets, as well as that push in the US dollar strength. And in addition to that, we also have the Bank of England maintaining rates unchanged. We also have the Bank of Japan maintaining rates unchanged. Obviously, that's putting a lot of pressure on the Japanese yen itself. The PCE numbers on Friday kind of calms the market a little bit. It comes in a little bit lower than what the market is expecting. Let's take a look at the core PCE index month on month. We actually saw a drop to 0.1%, which is, a pretty significant drop from 0.3%. Market was expecting a slightly lower drop at 0.2%, so it does comes in a little bit lower than what the market is expecting. And in addition to that, personal income and spending has decreased as well. So obviously that's going to kind of put that lead there in terms of how hawkish the FOMC is going to be. But the data that comes in on Friday, that's actually not enough to put, to kind of cancel that potential interest rate pause comes January from the FOMC. All right, so this week we don't actually have a lot going on. On Tuesday, December 24th, Christmas Eve, we got 2 sets of data. RBA meeting minutes that's going to be released for the Asian session, and obviously the US, we have the durable goods orders, and that's pretty much it. Everyone's pretty much off for the holiday seasons. Okay, so let's take a look at the technicals here. You can see the meltdown that happened last week. This is on the Aussie USD. Significant drop below 64 cents. This is again something that we have already been anticipating, that if price does drop below 64 cents, we were looking for that push lower towards 63 cents. That was the estimated range last week. Obviously, we dipped down a lot more. Market finds support pretty much at about 62 cents. Now, considering that we have the drop off in volume, I think this is probably going to be a stable market at this point in time. We're likely going to be hovering just likely above that 62 cents, looking a little bit oversold, but we don't have any confirmation from the technicals as of yet. We're waiting for more data here in terms of the stochastics and the RSI. Also, if we take a look at where the weekly pivot is located, about 62.75. So we're probably looking at a potential recovery around that level there, above 62.75, 63 cents, to actually confirm any oversold conditions in the Aussie USD. But yeah, for now, floor is at about 62 in terms of resistance. We're not going to be looking at that until about 64 cents for the Aussie USD. Now, next up is the Euro USD. Again, this is bottoming out. I think we're probably going to be looking at a very similar pattern here across a lot of assets. In particular, in the Forex market, 2 majors. We're looking at the Euro USD here. We have that double bottom forming, which is on the November low, early December low actually. But yeah, it is going to be about 1.0330. So we're looking at about 1.0325 as that immediate support for the Euro USD. This one here has recovered a little bit compared to last week's price movement. We did see that recovery on Friday on the back of the softer PCE numbers. Price is currently testing 1.0450. As at time of recording, this is slightly above the weekly pivot at 1.0435. If this continues to happen, and I expect this to continue to happen as we are looking at a lot less volume and a lot less liquidity to kind of move the market around, we're probably going to be looking at a very slow recovery here back to test 1.05, 1.0550 on the Euro USD. Again, bearish order block that we have from December, that's going to be a 1.06. That's going to ultimately be the cap for the Euro USD. So this one here is technically in a downtrend as it is, but we are in that phase where we have seen a little bit of a bottom forming on the Euro USD. We do see a little bit of a short-term recovery on across most of these major currencies. And the next one is the pound USD, very similar pattern that we have here. Again, we have that double bottom. And what's really interesting, if we take a look at where that double bottom is actually forming, it is actually kind of formed around 1.25 because the low is at 1.2475. We don't actually exceed 1.2475. So the double bottom itself, in terms from a technical perspective, it is at a psychological level of 1.25 on the pound USD. So this one here has bottomed out a little bit. Stochastic is not turning around. The RSI is already picking up. We're just waiting for that weekly pivot to be crossed over. Again, we're expecting the same thing to happen on the Aussie USD, the Euro USD, and now we're looking for that to happen on the pound USD, which is going to be at 1.26. So any daily close above 1.26, that could actually lead to a little bit of a technical correction, a little bit of a recovery on the pound USD. We're looking at market coming back to test 1.27 potentially this week if we're able to move back up above 1.26. Now, in terms of whether or not there's actually going to be downward pressure on the sterling here, again, we're looking at that drop off in volume. We're looking at drop off in liquidity. We don't actually look at an extreme movement, at least not for this week. Heading into the Christmas, so we're expecting a little bit of a quiet market. Probably there's going to be movement today, but tomorrow I think we're going to have a half-day market across the globe anyway. So I don't think there's actually going to be a lot of interest to kind of move the market in more of a volatile range. So we are looking at a little bit of a stable range, 1.25 as support. Once it crosses 1.26, we're probably going to be looking at that correction, that pullback towards 1.27 on the selling here. All right, lastly, we have the Dow Japanese yen and the Dow Japanese yen. Ever since it bounces off that bullish order block that we talked about ever since the beginning of December, you can see how the market has basically rallied up. And this is already something that we were anticipating for a stronger US dollar in the month of December. We got that extra extension there on Thursday on the back of the no change from the Bank of Japan. And in terms of their monetary policy here, they're probably not going to be looking at the interest rate hike to at least happen until about March or April. They're just waiting for that wages number to come in and before making that decision in terms of their monetary policy. So market took that basically literally, and there's nothing hidden behind their message there. So basically we're looking at a Bank of Japan that's probably going to be waiting for March or April before they start hiking interest rates, and the market got that signal. It pushes price beyond 155. Again, that was the price level we were anticipating. Any breakout above 155, we were looking for that push higher, 156, 157, and up to 158. And the high last week was basically 157.92, which is only 8 pips below 158. We see that correction on Friday. And for this week, any push lower below the weekly pivot, which is going to take price below 156, that's going to lead back to price softening up a little bit, likely back towards 154.50, 155 level for a little bit of a technical correction here. But again, I'm not expecting crazy wallet movements, at least not this week, considering that tomorrow is already Christmas Eve. Okay, all right guys, have a fantastic holiday, stay safe, and I'll see you soon.